Well, hello everyone. My name is Dan Stevenson. I work in the marketing department at FXChoice. Welcome and thank you for joining us tonight for the FXChoice technical analysis webinar with Trevor Neal. It's difficult to say that. We'll aim for the webinar to be about 30 minutes. We may go overboard, maybe about 10 minutes or so, depending on how many questions we do have. Just to remind you, if you have a slow internet connection, you can dial into this webinar, and we strongly recommend you to do so. You can find instructions how to do that in the email that you received after you registered. It's quite a simple procedure, and you can just use your telephone and often call free of charge, and you can hear us much clearer if you've got a poor connection. So Trevor Neal will be presenting today. You can read Trevor's full bio on our website in 8 languages. But just to give you a brief introduction, Trevor has over 40 years experience working as a trader and technical analyst. He worked at companies like Merrill Lynch and Bloomberg, where he was global head of technical analysis, managed a large hedge fund in South Africa for a number of years, was a founding member of the International Federation of Technical Analysts, which accredits such analysts today. So we're in esteemed company, ladies and gentlemen. So before I pass over to you, if you have any questions for Trevor, it seems that some of you already know how to use the little questions tab. I'm assuming most of you probably already do know how to do so, but you can use the questions tab to ask Trevor any questions, and I'll pass those on to him. Any questions that I don't get to, because we do receive a rather large amount, you can send them to webinar@myfxchoice.com. That's webinar@myfxchoice.com, and we'll pass those over to Trevor. Okay, Trevor, so over to you. What's going on this week? We've got, so far, I'm looking at gold rally, technically feeble, US 500 rally, technically unconvincing. Are you convinced by anything this week, Trevor?
Well, it's been a long day even so far. So let's have a look at the charts, and let's have a look at what's going on right now. So hopefully, just confirm to me, Dan, that you can see this. I'm hoping you're seeing the the Euro USD daily chart.
Correct. Yes, we are.
All right.
Yes.
Just do something here. Okay. Now we've had a big day, as you can see here. Very strong session here. But I just want to, just before I come back to today's action, I would just want to talk about the bigger picture. And the way we see the bigger picture, and this is something I'll do every time I look at something, is I'll first very quickly look at the weekly chart, where every bar is a week. Now, I don't use it in my trading, the weekly charts, but I want to get the context for what's going on, because if you don't do that, you can fall foul of not seeing very obvious things. And you're not seeing anything here, are you?
I'm not seeing anything, Trevor. We're not seeing anything at all.
I don't like the look of that.
Okay. The ghost chart.
Yeah, that was a. Let me have another go.
Yeah, Euro USD.
Yeah, but it's no chart. Okay.
Just says retrieving.
Yeah, I don't know why it wouldn't pull in the data for me there. Well, in the bigger picture, what we've got is this big consolidation pattern here. That's contained us for all of August and half of September. We formed a range here, and then we broke down from it at the end of last month. And then since then we've rallied, and I think rather poorly. And the reason I'm saying that, why am I saying that, is because we've got a bearish divergence in the relative strength index. Here is the relative strength index. We've got these lower highs in here. So we've got a bearish pattern, divergence on these first 2 peaks here, and then declining as the price itself declines. So not a divergence, but here on the second half, but here it's declined with the price. We come back to around 50%, the mid price, and then it looked pretty saggy at this point here until today. Now, what is happening? We've broken down out below the consolidation pretty convincingly on the downside, and then we looked pretty saggy until today. Now we're surging ahead and punching into this resistance point, and now it depends really. I'm sorry about this, but I think we keep losing the sharing but I've got it back now. So the question is, will it tonight finish above this line or below it? It is just a little bit above it now. That puts it back inside the consolidation. This relabels this trading of the last 2 weeks as, if you like, a false break to the downside, and any idea that the euro was going to turn down, and this pattern here looked pretty weak, but not with this bar here. The day isn't over yet, but if it finishes lower than this, then it's still below this now resistance line, was support line, leaving all this activity here, lots of buying and selling at very similar prices between 117.80 and 119.70, that sort of area there, as resistance. Profit takers, people, old longs there, who'd be delighted to get the opportunity to sell up here if they can. If we finish below that line, then I think we're still suffering from the resistance and most likely to go down. However, if it punches up today, tomorrow, the next day, and sits comfortably above this line here, then this breakdown that I thought we were seeing, and it looked very much like we were seeing, is not a breakdown at all. It's a false break, and we're reconsolidating inside this zone here. So I would say that by the end of today or tomorrow, we'll know conclusively whether this break is for real or not. If it is for real, so if we ease off later in today's session, then I would say that we'll probably come back and test the 116.20 low, and then the big consolidation, which is over here, one at 114.50, that sort of area there. So lots of targets on the downside, considerable resistance above. We're right on it, testing it now. This very moment, we're testing it. This is the nature of technical analysis. That every new data is new information. At this very point, it's not clear whether we have broken falsely or not, but as I say, very, very soon we will know. Let's move now to cable, to sterling. And I'm going to have another go at going in the weekly chart here. Maybe, here, happily, we pull in more data here. Yeah. Now, I'm going to draw a couple of lines on this weekly chart here and some important levels. The importance levels here is 127 here. So I'll draw that horizontal line there. You see here, we broke up impulsively through it. It was a previous resistance level. We powered ahead, then we consolidated from November through to February there. Then we broke down impulsively through it. Then we tested it 1, 2, 3, and then we broke up impulsively. And now we're retesting that level. Below it, this area below it in March, April, May, June, you can see that that pattern was an ascending triangle. So we had these higher lows pattern here. I'm drawing a line like this. I'll redraw it as a dashed line. And those of you that are getting to know me here, when I say a dashed line, draw it like a dashed line, it's because it's not a trend line, it's just marking the pattern of higher lows. And I do this as a kind of shorthand to remind me that it's not to be used for placing stops or anything like that. It's just higher lows. So we had the higher lows pattern, the horizontal top pattern, we broke out of it. The indication of that is that we would go a lot higher. We'd go this height to the upside. We only went about halfway up. Now we've pulled back. This is something that happens very often after breakouts. And to me, this looks like it's holding the 127 level, very important level that's been proved previously and is steady here. Now let's drill down to the daily data. So this is this behavior at 127. We came down in a wave, we rallied, we came down, tested it. We only had shadows below it. And very crucially, from a technical analysis point of view, we came down here, powerful wave down, rallied, made a new low here. So this low was low and that low, but look down at the RSI. Once again, the RSI was terrific. It had a higher low, lower low on the price, low, higher low on the RSI, a bullish divergence. This is a weak sell-off here. Now we've bounced. The trigger will be the break of the 130 level, very important level. Round numbers like 130, they're psychological levels. They're very much embedded in our psychology, but also it is this high here. We've got 3 tops at 130. We're pretty close to it now. We've traded up to today at 129.90, so pretty close to it. The RSI is coming up strongly here. It's still pointing up. It's not overbought, and so I'm quite happy with that. And the MACD has also crossed in the last couple of days positively too. Now, if we break the 130 level, then I think that puts all this area down here, this consolidation down here, as support, and then we can move up from there. We have got a bit of consolidation here, but the move down here was very fast. That means there weren't many trades taking place. There aren't many participants at this price. There aren't many sellers to get out and liquidate as we go up through this. So I kind of think that this potentially could be close to breaking to the upside. Of course, it could fail, you know, and 130 is the number. We haven't broken it yet, and you know it's too early to say we have broken it. And so this would be, if it's going to fail, would be a good place for it to fail. So once again, we will know end of today, tomorrow, Wednesday. By then, it will have either broken or failed. Now, one of the things that helps me decide whether that's likely to happen is I look at Bollinger Bands, and the Bollinger Bands are squeezing here. So this upper band is coming down, the lower band is coming up. This is a drop in volatility, a sudden drop of volatility, and this often happens before an explosion in volatility. Now, that explosion in volatility could be to the upside or could be the downside, but the Bollinger Bands, the volatility measurement of the market, is indicating where an impending sharp move is about to take place. It isn't telling you whether it's going to be up or down, and it could be down. Of course, it could be, but of course, I've got a feeling that it could be up. But the trigger, you know, when the feeling becomes a trade, is the break of the 130 level. And what I do see from various reports like Commitments of Trader and other data sources like Reuters have bank data on trading activity, and that the market is short of sterling. And so there are a lot of people for whom a rise in sterling will hurt them a lot. Big commercials, big banks and hedge funds are wrong-footed if this market goes up. So I think there's potentially a great deal of short covering if we do manage to edge a little bit higher than we are now. So there we are. The 130 is the key. It could fail at 130 and could continue to consolidate it between 130 and 127. That's the range. But we're there now, and there's good reason to think that it could break, and the move that follows it could be swift.
Trevor, we've got a question.
Yes, go ahead.
Well, actually, it's quite a large question.
Okay.
What's your take on New Zealand dollar JPY, Euro JPY, and Euro GBP? So I was thinking we were just talking about the sterling. Maybe that you could answer the Euro GBP take. Thank you for your question, Thomas.
I will do that. Apologise to the person. We haven't got time to do that. I need it earlier in the talk. Well, actually, before the talk, if I'm going to add things in. So send messages for this kind of thing in advance, and I will include things. I want to talk about what interests you, but we're on a tight schedule. If we have time at the end, I will. But let's look at the Euro GBP. I can do that for sure. This is what I've been noticing about this. And this is Euro GBP, so this is drifting. Actually, I'll draw this in a different way, excuse me. I'll draw this like this. Parallel lines is what I want to draw in here. Okay, so we're in this channel here. It's very defined on the upside of the channel. It's only got 2 points on, well, you could argue 3 points for 2 points only. It's got some reluctance to go further down. I've got to say that. You know, so it's rather flat, the RSI. The RSI is just below 50 here. This could be a flag in the end. Now, this is Euro GBP. So this is would be, if it's a bullish flag, it would be bullish for the Euro. So here's the flag pole. Here's the flag. The break point is a lot higher than we are now. It's up at 91.35, let's say, that sort of level there, and the line is declining. It's mid-range in this declining channel, and so I would say, from a trading perspective, I think that it is forming a flag potentially. It is in the middle of the flag itself, so it's not threatening the edge like we were just watching on the sterling, so not at a decisive moment. It is not going down, and one of the reasons I think it's not going down is because it's met this very substantial support here at 90.60, I think it is. Here, high, 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 breakout through there, very impulsive when it went above, retest with a Takuri shadow below, rejection below, rejection, rejection. And so it's finding support within the flag itself. So I'm rambling on saying that I don't feel there's a big opportunity here for me at the moment. I think it's more likely to go up, but the trigger level, I'm afraid, is a bit higher to indicate the big move, which would be the flagpole measured up again, the repeat of the flagpole, if this turns out to be a flag. All right, I hope that answers the question well enough. Now we're looking at the Australian dollar. Here, so this is Australian dollar, US dollar. So rising is the Australian dollar rising. So once again, I'm going to go to the weekly to get the context of that. Now, I've been thinking that this big rise in the Australian dollar looks extremely toppy, and then 2 weeks ago we had this big sell-off, and to me that seemed like it was an indication that we'd had formed a top, a sort of nice loss of momentum into the high here after this long run up since March lows, and that this was a very indicative candle. But now we've retraced 50% of it here. It's not made the break up yet, but it has recovered 50% of the fall. Let's go now to the daily. So let's pull this apart, this rally. So this is the rally. This rally is about 50% of that fall there. That was the big black weekly candle was there. So what have we got on this chart? I think that what we've got is a market which, don't forget, on the left-hand side was a powerful move up, and this is, we've got a topping formation. You could argue that this was a head and shoulders pattern, high, 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 lower high. If that was the case, then from the left shoulder to the head, the low in between is we draw a line, and then from the head to the right shoulder, we draw a line. And if we do that, from here to here would be the measurement for the minimum price objective. We exactly made the objective. So this swing here was the same amount of points as from the high to the neckline of the head and shoulders. So you could say, if it is head and shoulders, that this head and shoulders was complete, and it had met its objective.
And Trevor, we just have a quick question.
Yes.
Mark Terrell asks, what are the moving average sizes?
Oh, a good question, Mark. Sorry, I should have mentioned
Thank you,
this.
Mark.
This is 50 and this is 200. So the 200, obviously, very, very smooth here. I don't use it myself. 200 is an enormous sample. I only put it in there because lots of people follow it. And we crossed it when we broke the neckline here. Very notable that we did that. And we are below the 200, but still above the 50 here. The 200 itself may be exerting resistance below the neckline here. And so I think that I'm looking for this movement of the last 3 bars here to develop into some weakness. So what would confirm it for me as a trader would be a break of the low of Friday's candle, and that's at 71.28. So something like 25 or 23, a price down there would tell me that this is turning down. then I would expect it to turn lower, retest this low at 70, a big important round number at 70, and then possibly even breach that level, because I would be looking for, if it broke that, I'm thinking much ahead, by the way, I'd be looking for it to go down, excuse me, here, to touch here. I'll measure from here to here, and then the reaction. So this would be A, B, C, but where's D? If it turns down here, A to B is 100%. Then this is C, and D would be through the 70 down at 68, 63. So 68, 65 or so. So if this turned down, broke this low here, then I think that we could turn much lower, and I feel very confident about it if we took out the 70 level for us to make a move down to 68, 60. And the protection would be above this 72.07, so something like 72.15 would be the protection. But the trade hasn't been triggered yet. Now we're going to go to the US 500. And let me once again go to the weekly chart here. I always want to look at the context of this. And you know, we broke through the February high. Here we broke up, but it turned out to be a false break. Now we're back underneath it again. And so very disappointing for the bulls, because for a week or two, it looked as though we were on our way again. But now we're consolidating below the very important 3,400 level. It's testing it again from below, and that's encouraging. The MACD, which I use to determine the overall trend of the market, the context of the trend, didn't break down, and is still, the MACD is above its signal line. And so though it came very, very close to it, it didn't actually go negative. And so for me, this is still a bull market. Now going to the daily chart. So here we are. So you can see the importance of this level here. This line is extended from the old high, and this is the activity above the high, and all this activity below the previous, the February high. So this is a very important level, very close to the breakout point on the upside. And if it's going to do it, I think that we've got three tops in here. And so for me, the trigger will be a move through 3,430, 35 would be the confirmation. And that'd be the kind of move I'd like to follow actually. And then I would use a kind of close protection, probably a little bit below the low of Friday's candle there. The low of that was 3,223, so I would put it at 3,218, that sort of level. I like the look of the RSI moving up here, and the reason I'm favoring this to the upside rather than the downside is because of that longer term context that we've got there, which is still bullish. So I'm a sort of trend follower, and because this is a resistance level, and if it breaks, I don't think it would have any trouble making new highs after that. There's very little resistance up here, so clearing this level here would be the trigger, I think, to bring in a wave of buying. But once again, we're right at the decision point. Okay, at long last, we're getting to gold. So I'm going to look at the weekly chart on gold, just to remind ourselves of the good old days on gold, up and up and up and up and up. Then we went to 2,000, a massive round number. We went 20-something dollars above it, and then we consolidated, and I think that we formed a descending triangle. Then we broke down from the descending triangle, and now we're rallying. Now let's look at the behavior of the rally itself. Now, this was the breakdown. This was the horizontal line of the triangle. Massive consolidation in here, massive resistance in here. But we broke down, and then we started to move up. Now, I did feel that this lower line here of the the descending triangle would halt the move. But we're strong today, there's no denying that, and we've punched into the consolidation area quite impressively, and also the RSI is moving up nicely here. And so this picture has gone from being potentially a sell opportunity, as if this rally failed at the resistance point, which it didn't do. It didn't actually fail here, but if it was going to fail, this was the level it was going to do it. Now it's punching into this consolidation area quite impressively. The trigger is this downtrend line, the descending side of the triangle. I've drawn it as a dashed line because it doesn't line up. So I'm very careful when I'm using lines like solid lines here. We've got several points on the line, the breakout here, the resistance here. That's a valid line. This is not a line. This is just a picture of high, lower high, lower high, lower high, not lining up. So I can't really say that the break of this line confirms that we're going up in the way that I felt the breakdown did. So I think that again, it's a bit like the euro. It depends how it finishes today and tomorrow. If it finishes strong like this, it's punching back into this area of consolidation, which I've circled in here, which I think it will find quite difficult to push through, because we traded there for about 5 weeks in a very narrow range there. A lot of people, there are a lot of old longs there around 1940 who would be really pleased if they saw 1940 again. They would say, oh, thank you. I really believe in God. I prayed for this and now I've got it. I can get out. I never thought I'd get out scot-free. There are lots of people around there because we did a lot of trading took place at that point there. So that's all lurking above us here, making it very difficult for the market to push through. And 2000 itself is, of course, a very significant psychological level. So we will continue to consolidate and move into the consolidation, which I think it will be difficult to get through, or we're going to turn down, and the turning down would be the break of either today's low or Thursday's low. Here would be the confirmation that this line has actually held, and it was just after a breakdown, a revisit to the break point, which happens probably 40% of the time when you break a significant support level. You'll make the break impulsively and then revisit it and then move down. So it's early to say, but we've got a clear technical level which will tell us whether that is the case. We try not to think of it, get any emotional attachment to things. We want to see the picture clearly, and it's not clear until that it's going down unless it breaks that low. It's not clear it's going up unless it gets all the way through that consolidation, which we do know from experience is probably going to be difficult to do. There's going to be a lot of friction in that area up to 2000. Right. Do we have any questions, Dan?
We do have one question, Trevor, but it's regarding the euro Japanese yen. Have you got time?
Yes, I'll do that. Just bear with me 1 second.
It's again from Noble Thomas. Thank you again for your question. He asks, is the euro Japanese yen retesting the neckline of head and shoulders?
Okay, that's good. I like the question. Okay, so it's euro Japanese yen, and we did look at this the last time. This is sort of a little bit familiar, isn't it? This behavior of testing breakpoints. So this will, I imagine, this is the head and shoulders you're talking about: high, higher high, higher high, higher high, higher high, lower high. Left shoulder, head, right shoulder. The low between the left shoulder and the head is the first point of the neckline. The low between the head and the right shoulder is the second point on the neckline. Then we extend it here, and this could be the euro, couldn't it? Here, testing the breakdown point. So we broke down, and 1, 2, 3. So we didn't quite get to the minimum price objective of the head and shoulders. The minimum price objective of the head and shoulders was 122. That's measuring from the high to the neckline, measuring from the break point by the same number of points would take us down to 122. but we're turning up here and certainly retesting the neckline. And this is a big day in the euro. It's a euro move, and we are testing that line. So the day isn't over yet. It's a rampant day. If it finishes really strongly like this and follows through tomorrow, then we're back above the neckline, and we're not, the 122 objective is not going to be reached. If we have a sell-off late in the session tonight in the States, and we're left with a shadow at the top of the candle, so this candle changes its shape from really a Marubozu as it is now, with closing at or near the high with very little shadow below and very little shadow above. That's potentially a very strong candle. But if we sell off and come back and maybe finish the session down closer to 124, leaving a shadow rejection at the neckline, then that's valid. That has sort of validated the idea that this is a retest and a failed retest of the neckline. So we should know by the end of today whether this is failing, which would require a sell-off and a shadow above. If it finished right at this point, it's very difficult to say that has retraced inside the neckline, and so we wouldn't know until tomorrow, the next day, whether that is the case. I think we need to finish a little bit higher than we are now, say through today's current high, to be confident to say that we have now returned above the neckline, therefore invalidating the head and shoulders pattern. Does that answer your question?
Well, he says, thank you, Trevor.
Okay, thank you very much indeed. I hope it helps. I want more than anything to be more, it's clearly going down, it's clearly going up. But when you're on these important levels like this, and again, going back to the euro here, because I'm dying to watch it, this is almost the same thing here. It's not a head and shoulders, but it's a big, broad consolidation here. And here we are on it. If it sells off today and finishes, more like a 117.50 sort of level or something close to that, leaves us a shadow here, which is a negative candle here. If it finishes above here, particularly if it finishes above the current day's high, today's high, then I think we say that it has now gone back inside the consolidation, and it will continue to consolidate in that broad range. If it finishes exactly where we are now, at this very price that we're at now, it's very indecisive, and we'll have to wait till tomorrow to know what it wants to do.
Thank you, Trevor. Well, we've gone over time by about 3 minutes, but I think we've done pretty well this week, actually. Thank you very much, Trevor. If we haven't answered any of your questions, or if you think of any questions that you can, after the webinar's finished, please feel free to send them to webinar@myfxchoice.com, and we'll get those questions sent over to Trevor, and we'll hopefully get an answer to you. Don't forget to join us same time, same place next week, where we'll have another webinar. We ask you when we do finish the webinar to complete the survey. We have a new survey this week with some more detailed questions that hopefully you can answer. And of course, these answers help us improve the webinar that we create for you guys. So thank you very much for joining us, and we'll see you all next week. Thank you very much, Trevor.
Thank you very much, Dan. Thank you, everybody, sincerely. May the trend be with you. I'll talk to you next week.
Thanks, Trevor. Bye-bye now.
Bye-bye.